Hello, hello. So good evening, everyone. Good evening and welcome to this evening's presentation. My name is Adam from Trade with Precision, and I will be your trader, analyst, and speaker for this evening. First, I would like to do a sound check. If you could just type into the questions box if you can hear me, and then we can kick off. I see that there are still people logging in to the webinar, so just giving an opportunity. And good evening. Fantastic. Okay, great. Thank you. Thank you. Now, fantastic. Okay, great. So I can see numbers are climbing, people are still logging in, so that's all good. And you should be able to see the slide in front of you, which is ATFX swing trading explained and demonstrated. So first of all, I'd really like to state that I'm really excited about this more than the other webinars that I tend to do, because I am a swing trader, so I'm the right trader for this particular webinar, which is great. And I'm excited about relaying as much information about it as possible to you. And I would really like you to get a sense of practical trading by the end of the hour. And I would love this to be as interactive as possible. So please feel free to ask questions as we go, and I will do my best to answer every single one of them by the time we finish. Now, what I do need to do before we kick off is there are two risk disclaimers I need to give you the opportunity to read. So I'm going to give you about 5-10 seconds on each one, and then we can kick off, okay, into the agenda and the rest of the content. So while you're reading that, I'll tell you a little bit about myself. I am based in London, and it's actually, for once, it is a beautiful summer's evening. I'm really enjoying it. So I'm a fund trader, and I'm also a swing trader. So I trade funds for regulated entities in the UK, and I'm a swing trader and a couple of other things. I'm a trend trader, so I'll be focusing on that as well. That's a very important part of this evening. And being a swing trader predominantly means that I take entries on the daily and or / 4 hourly time frame. So we can have a look at that. So we're going to include some technical analysis tonight, which is quite important. And really, although I can trade, I can also be a day trader if I want. I've settled for the current, at least for the last 18 months, I've been doing at least about 80% of my trading has been swing trading. So I really want to give all of you a sense of this. So it also would be of interest to me, if you're up for it, is to first of all let me know where in the world you're listening in from, and two, to give me a sense of, are you a beginner or intermediate trader? So are you perhaps in the first 3 to 6 months of your trading journey, or possibly in the first 18 months? Okay, so that gives me a sense of who I'm talking to and the kind of information I need to convey across. I also want you to feel you're welcome to sit back and just listen, but you will get so much more if you ask any questions, and you can ask any questions at all. All right, so what else did I want to throw into that? Let's have a look as we go through. Great. Oh, that's fantastic. Thank you very much for that feedback. Cornwall, fantastic. South Africa, brilliant. Nice to have another Safa listening in. Also very good. Intermediate, 4-hour daily, fantastic. 5 years from Hong Kong. I love this. Germany as well, 18 months. Okay, good. So what I would like to do, really the goal here that I want to convey across this evening is, I want to talk about consistency. So I'm going to be writing notes. I'm going to be drafting stuff as we go, and I want you might have to screen capture or take stuff down. This is being recorded, and I believe it will be uploaded, so you should be able to get access to the recording. But I'm also going to create content as we go, and I might be expressing some opinions of mine, which will be mine and not necessarily that of Trade with Precisions or ATFX. I really want to convey as much experience as I can. So really what we're trying to do, let's kick off by stating and by saying that what we really want to achieve as traders is consistency. So we don't always know this in the beginning. We think that trading is exciting, which it can be, of course. And it's kind of like successful gambling, which it obviously really isn't. It is about doing an activity over and over again that will yield, in terms of probabilities, will yield profit from multiple trades. Okay, so we're going to talk about real practical day-to-day trading for either a primary source of income or secondary source of income. And so I'm going to use a whole lot of analogies, but really the goal here is we shouldn't really care which markets we trade. We shouldn't. It shouldn't really matter. What should matter is that every trade setup we take has a very high probability of success, but not a guarantee. So let me repeat this. The way that traders trade, technical analytical traders, so we're going to be doing technical analysis, is we look for setups that have a very high probability of making some money, or like a little or a lot of money, depending on how the market unfolds from that particular setup. But there's no guarantee. So there's both the factors, the probabilities are it's probably going to go away, but it isn't guaranteed. So because it isn't absolutely guaranteed, we're going to put a stop loss in, and we're going to take profit as we go. Now, out of every 10 trades we take that have these really high probability setups, a couple potentially will be losing trades, a couple will be potentially break-even trades, and the remainders should yield profit. And so the goal out of every 10 trades, for example, 10 trades, would be to be net profitable. Okay, so that means, and I want you to listen to this particular thing here, it means that one single trade doesn't define us as a trader. We need a sample set of trades, 10 trades, 20 trades, 50 trades, for example, that will then will help us identify if we are largely profitable. And if I take 10 trades and I'm 1% up, that's not a bad thing, okay? As I get more and more, as my technical analysis improves, and as I become more confident in my strategy and that I understand it properly and that I can identify a good setup, my number of losing trades per 10 trades has dropped. So maybe as a beginner, I make mistakes that I shouldn't really be making. Maybe I just make silly mistakes, calculations, or I don't know, maybe I just make absent-minded mistakes. And so maybe I have 5 losing trades out of 10, for example. And of course, as I get better, that number of losing trades per 10 trades will drop down. It'll go down from 5 on average down to 2 or 3 losing trades per 10. Not only that, but I'll get better at identifying stronger setups, which are setups that will yield greater profits. So what will happen is I'll stop picking markets that are not really in my favor, I'm going to show you this, I'm going to demonstrate this. And I'll get better at selecting that stuff. So the actual profit I make will get better. So I'll take, basically, it means that as traders get better and better and better, they can take fewer trades and make more profits. Right? So it's the best way to think of trading is as a sport. And the comparison is because trading, technical analytical trading, is a lot more about pattern recognition and body language and reading the motion of the markets than it is about numbers per se. The numbers are built into it, but focusing on the numbers is not really the key. It is a lot more about pattern recognition, and so it's a lot more about sports. It includes practice, having some good training. There is, of course, some discipline, but common sense as well, not exhausting ourselves, not overreaching. We can enjoy it, and of course, as we get better, it becomes easier, relatively speaking. Once we start to get a feel for it, it does. Now, if you imagine you took someone and tried to teach them a new sport like golfing or surfing, something that requires almost something that you couldn't fake your way through. I've met one person in my entire life out of thousands of people who was relatively natural. And even he still had a mentor and a trainer. That was Nick McDonald, who started Trade with Precision. Intuitively, he seemed to know, okay, this makes sense, this doesn't make sense. But everybody else I've ever met, has always gone through the same universal experiences of struggling. But the difference is that ideally, if we are put on the right direction early on, then obviously that helps us a lot more. So that's what I wanted to do tonight, is to first of all remove things that are that's kind of voodoo stuff and things that just get in our head that doesn't help us. All right. So on the agenda, and then I'll go and have a look at your questions. On the agenda are the benefits and drawbacks which swing trading brings, the type of trader that swing trading is most suitable for, that is to say, that's Latin id est, those that don't want to stare at charts all day long, how swing trading may help to eliminate intraday noise from the markets, other options for traders with smaller accounts. So what I want to do is talk about all this, get this out the way, and then we can kick into the really cool stuff as well. I'm looking through your comments. Yeah, London, look, so far in my life, the 2 best places to be in summer is Cape Town during summer and London. They're just the most amazing places, but I've only lived in a few places. There you go. First 6 months of trading, just want to learn as much as possible. Great. Oxford, beautiful. Israel, just, oh, I love Israel. Big fan, by the way. I've got a couple of really good friends there. Absolutely love the place. So cool. Okay. All right, good. We've got some good stuff there. I'm just making sure I've got everything there. Okay, cool. So let's talk about these slides. Okay. So first of all, the benefits and drawbacks which swing trading brings. All right. So let's talk about that for a moment. There's not necessarily a lot of drawbacks. But let's just cut to the chase. There's not a lot of drawbacks with swing trading. And so I'm going to get into a little bit of strategy and a little bit of technical analysis in a moment. I'm going to start out by talking about this stuff first. Now, I have a little bit of a notepad, which I've just got to find, which I'm going to draw a couple of these points on, and we'll come back down to that one. So we'll come to those in a moment, so don't worry about that. I'll talk about that. So in terms of the pros of swing trading. All right, and I'll explain to you how I am. So first of all, I moved to the UK. I knew that I wanted to learn how to trade, and this was in 2008, 2009. Ended up attending several programs in London, paid a lot of money. There was some good content in there, but overall it was definitely more about a sales pitch. It was to kind of get me to buy more stuff. And I don't think that it was the right way to go about doing it. But while I was attending one of these particular seminars, the guy who was presenting was a futures trader, and he said to me I should subscribe to a newsletter, which I subsequently did, which was Nick McDonald stuff. And then I was following that for a couple of years. And Nick was basically a trend trader, technical analysis, and he was always bang on. He would do a once a week newsletter on the dollar index and a few other things, and I just thought this guy's bang on. And a big part of that was, and again, I want you to kind of pay attention to this, and there's a couple of things that seem to sabotage most traders. All right, so let's talk about those briefly, because they impact traders on multiple time frames. So first of all, okay, so these are things that I've experienced over the years have really sabotaged traders. Is trading too low a time frame. So basically, traders get in. The first thing they do is they start trading 1 minute, 5 minute, 15 minute, 30 minute, 1 hour. And the issue with that is that it's a lot like taking your very, very first driving lesson and getting immediately. So while you're still trying to learn how to change gears and find the indicator, and just it's literally your first driving lesson, you're now getting on the highway during peak traffic, which is just insane because it's a complete information overload while you're still trying to just get to grips. So the equivalent with trading with that would be is trying to understand how the platform works. Now, please understand that there isn't a single trader in the world who didn't start knowing nothing. Every single trader knew nothing when they got started. So this is a learnable skill. It's closer to learning a professional sport or maybe a musical instrument or a language. But everybody had to start knowing nothing about it. So this is a skill that everybody can learn, but I do believe that most people are not necessarily exposed to the right kind of programs. I think you either commit to the first one that comes your way, or you commit to the one that sells the hardest, and this is not all. There's a lot of junk out there. The forums, there's a lot of junk out there. Baby Pips is really good, by the way. Baby Pips has a website, great. So there's some really good stuff out there. And I'm going to explain. I want you to get to the end of the 60 minutes going, okay, I really have a clear understanding of how trading actually is supposed to work. So trading too low a time frame. So this would be like 1, 5, 15, 30 minutes. Okay, so the logic behind why this is problematic is that the market is incredibly volatile at lower time frames. And so it can change trend or it can go sideways. It could do a lot during a given period during the day. And so it's too volatile. And this is a big problem. So this doesn't really help us. Okay, the next thing is trading the same market. Okay, sorry about the spelling. While I do it, I'll fix it. Trading or only one market. So that means somebody told them they only had to trade the euro dollar or the DAX or something, or the FTSE, and then so they're trading only that market. Problem with this is the market conditions can vary day in and day out. So if you combine these elements, you're going to get really screwed because you're going to be trading a lower time frame in a market that just might not be tradable that day. So this is why this comment is here, is market conditions matter. And the analogy I love to use, because it is also a good one, is surfing. If we were going to learn how to surf, all right, so first of all, we've got to be able to swim. So that's safety, common sense. We would go to a particular particular spot that is popular for surfers. And then on the day, we would look at the conditions and go, obviously we would have a weather forecast of sorts, but we check the conditions. Is it too flat? Is it like glass and there's therefore no waves for us to surf? Is it too stormy and volatile for our experience level or just for any surfers? So basically there's no one there, it's way too stormy, it's too dangerous. Okay, so once we find a range of conditions that is suitable for us and our experience level, we'd get out. Then this is where it gets really cool. We would look for a set of waves. So the direction in which the waves are going is clear. It's usually going into shore. We'd wait for a set of waves. Then it becomes about timing. We've got to paddle with the wave. If we miss it, it'll go on without us. Our goal is to get to join the momentum of the wave, and once we're on it, obviously then to get up on the board. So obviously as beginner surfers we have to learn how to get on the board and balance it, but after a while that becomes muscle memory. So then it just becomes about each individual wave. Now, although no two waves are the same, waves in general have the same properties, if that makes sense to you. So that means that waves and seas and oceans and stuff generally will have the same type of properties, but obviously no two waves are the same. So the point is they are similar enough that generally speaking we could do that. Now once we get on our wave, we have to make a decision. Do we ride the wave all the way to shore or until the wave dies out? How long are we going to surf for? How much energy do we have? How much time do we have? Obviously, once we're on the wave, we have to negotiate it in real time as it's happening. And remember that if we get on a wave and then it just dies unexpectedly for some reason, we don't take it personally. We also know there's a possibility we could get dumped. So, and obviously as we get more and more experienced, getting up on the board, enjoying this, it becomes more muscle memory and subconscious or unconscious. And of course, getting dumped, those kinds of experiences, the danger kind of goes away to a large degree. But we also know there's no guarantees in life. We know that it could be, there are dangers, so we have to be careful. So that gives you a really good reference as to what surfing is compared to trading. So we're looking in trading to find good conditions to match our experience level. That's what we're looking for. We're looking for timing. We're looking for a set of waves in the market. We're looking to get on it. We've got to join the momentum of the wave at the right time. And we have to make a decision as to how long we're going to trade for and when we're going to exit that trade. That's very important because trading and investing are two different activities. Trading, ladies and gentlemen, listen to me on this one, is about doing a shorter term activity, getting in and out of the markets to generate profit and net profit out of all those trades that is then there to generate cash flow. It's not the same as investing. It's like if I buy a property, fix it up, sell it. It's not the same as buying a home to live in. They are two different activities. A day job is a cash flow generating activity. Trading is a cash flow generating activity. We need to remember that because in the beginning, we stay in the trades too long and we give back profits when we should have a rule that says, this is where your stop loss is, get out when it goes against you. And you have to obviously follow that rule and take profit at these, and you have to follow that rule. So it is just as important to follow the rules of taking profit as it is to exit the trade if it goes against us. So these are a couple of other things. Can I just check if the audio is still okay? I just had a comment on the audio lagging. Okay, you've got some good questions here. Audio is good. Okay, good. Yes, I'm still on the first slide, but okay, sorry, I just realized something. The notepad that I've been writing on was on another screen. I've got multiple screens on my desk. I apologize massively. I'll fix that. Okay, good. Okay, cool. So that was actually me. So I've got like multiple screens. Okay, good. So if you're able to, can you spread some light on entry with buy-sell limit trades? I seem to just miss the entry. That's fine. So the bad habit of keep checking, same as take profit because I just missing the exits and are we still on the blah, blah, blah. Okay, cool. Okay, good. Yes. So there was a comment here saying I treat investment as trading just on a larger time scale. And actually that is a really good point, because basically the skills we have for trading is about identifying a nice uptrend or a nice downtrend, and then it's about timing. And actually trading skills are transferable to investing. In other words, if I'm looking at Apple or Facebook, I can determine if it's a nice healthy trend, if it's looking nice and decent, and I can get in on the weekly and monthly time frame. So basically I can transfer. Technical analysis is incredibly good for timing, so we could do that. So so I do like that. Okay, good. And all right, cool. So I'm going to try, because I've only got 60 minutes, so I'm trying to do this. So these are the kind of things that can be quite dangerous, using not having, well, I was going to say not having a fixed strategy, or changing strategies too much, or lack of training, lack of education. So basically we need to understand, we need to separate. This always throws me. SEPARATE, technical analysis, which I'm going to talk, and trading. Okay, so basically the point is, technical analysis in the case here is analyzing the chart conditions. That is a skill we have to learn. That's like body language. We've got to learn to read it. It's not as hard as you might think. All right, we're going to go and have a look at a chart, and I'll get you started on that. We can actually develop this relatively quickly, meaning as in 3 to 6 months, and then it gets better over time. But we can get to a competent level within 3 to 6 months. It's not super complicated. But trading itself is the activity of qualifying a setup and placing our orders and managing trades to completion. That's very important. So if I say to you, with swing trading, okay, so if we talk about the pros, these are mistakes that there's actually quite a few, but I'm not going to go into all of them that I'm going to say lost traders do. Okay, or make. So the pros of swing trading for me is, first of all, difficult to miss a setup. Let me explain why. Because let's just say I'm looking at the daily. If I'm looking at the daily chart, which is, so for those of you who might be absolutely brand new to this, swing trading is really about looking for trade setups on the daily. Historically, that's kind of the definition of it. But we can also technically look on the 4-hourly time frames. It basically means we trade the higher time frames. Day trading is trading within the daily hours, kind of call it 8 to 6 p.m., 8 a.m., 6 p.m., closing out our trades. We don't have anything overnight. Okay, and so here tonight, we're really talking about what are the benefits of swing trading. And the benefits of swing trading, if we just kind of temporarily go back to the slide, the benefits and drawbacks of swing trading is, first of all, that all we have to do in essence is look at the daily chart. It means it reduces the number of charts we have to look at. So if we look at all the currencies, that's about 28 currency pairs. So that's euro, dollar, GBP, dollar, Aussie, US dollar, Kiwi, US dollar, dollar, yen, so on. And it comes up to about, then we do the pairs, euro, Aussie, euro, Kiwi, euro, yen. That basically comes to about 28 charts, give or take. Then we could look at the indices. That might be about 5 to 8 different indices. Then we could look at commodities. That gives us 4 or 5 commodities. It's doable. It means we can go through the charts relatively quickly, and there's either a setup or there isn't, which means that the process of scanning for the charts for a daily opportunity is very quick by comparison. It literally means, yes, there's a setup, no, there isn't a setup. So let me show you, we'll talk about that. It just means, and then I'm going to go to the charts and show you this. Basically, it means that it's very quick, and it's either there's a setup or there isn't. It's very yes or no. It's great. Our goal as a trader is to do a trade with precision, is to do 2 to 5 trades per week on average, getting yielding a net profit of 1%. Okay, so we're talking kind of, this is relatively realistic. Yielding a net profit of 1% out of those 2 to 5 trades, which should compound to about 5% per month. So 1% per week, compounding to about 5% a month. So that's kind of what we're looking for. Now, whether we do that during the day or at the end of day, both of those are relatively feasible. The problem with intraday trading can often be lots of trading, and so it's exhausting, and it can be quite volatile on the lower time frames, quite susceptible to news announcements. Trading on the end of the day is not as susceptible to news announcements. So as technical traders, we are not obsessing. This is very important. I really need you to listen to this. I'm going to bring up my checklist and put it in here because this is a big one. All right. Heavily influenced by the media. So if you find that you are stressful, you are stressed by listening to what Trump is doing, you're reading about that, and you're listening to and you're hearing about Bitcoin, and you're getting caught up in that, or Brexit, and you're letting this influence which markets you're trading and why, that is going to destroy your trading. Okay, this is a big one. And so technical analyst traders, they might listen to the news or read it to stay up to date with worldwide events that are important, but by no means do they let it interfere with their trading. And one of the ways I often find, if I am mentoring someone and I find that this is coming in, they basically have a media ban for about a month. Basically, for a month, they are not to trade the markets that might be in the news, or they're not really allowed to listen to the news. And usually they then realize they have to start making decisions based purely on what they see on the chart. And once they do that, suddenly it becomes more about, not about why the chart is doing what it's doing when we're hearing the media, but more two separate activities. The chart will do its thing, the media will do its thing. And that's where traders start to stabilize, because this just absolutely destroys beginner traders. All right, and there's so much stuff. There's 60% of the content on the forums is basically people who are so mad and frustrated. They keep talking about why the market is supposed to be doing what they think it should be doing because this is what the media is saying, and blah, 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 blah. And they're confusing media with fundamental analysis. And so this is, I just cannot emphasize how much this destroys beginner traders. So we don't do that. We do not let the media tell us anything about it, but we do pay attention to economic calendar news. So that means interest rates announcements by central banks, for example, can swing the markets temporarily. All right, the markets move not predominantly because of the news. This is important to understand. These markets have existed long before social media existed, and long before they were accessible by retail clients. So the markets used to move because there's an underlying market. The stock market is influenced by shareholders and companies that got cash that want to invest. That's like saying the property market moves because of the news, when in actual fact the property market moves because of other things. Currency markets move because of interest rate differentials between central banks, hedge funds, institutions investing, foreign tourists exchanging money, companies ordering supplies, paying supplies across borders. So Apple in America paying China for certain things, and money has to be exchanged and it has to be transferred between countries. And those are what cause the moves. Then we might get on a moment-to-moment basis a spike related to the news maybe that comes out, but on a day-to-day or at least monthly basis, those moves are determined more by the actual market and the actual participations and movements that are there, that are taking place. And we need to learn that the media should be removed from it, but we do want to be aware if there is a potential high impact news announcement coming out, it could spike the market, like non-farm payroll. So for example, the US dollar makes up about 85% of all transactions on the planet, because you've got gold and oil priced in US dollars, and the economy, their GDP is 19 trillion compared to the UK's 2.7 trillion, compared to China's 13 trillion. So they're absolutely gargantuan, and they impact the rest of the world. So, and they always have. I mean, at least certainly since the world wars. So we need to understand that we need to have a respect for what's going on in the US, not in the economy per se, but on the chart. Is the US dollar strong? Is it weak? Is it consolidated? And even if we think that the media, that what we think Trump is doing should cause a weaker US dollar, for example, we have to understand that with currencies, there are two parties. So we've got the euro could weaken and the US dollar could weaken at the same time. So, but we could find that, for example, the euro is weakening slower, therefore that chart will actually go up because the US dollar is weakening faster. So there's a whole lot of things we want to take into account, but our decision should be, look at a chart. Is it trending up? Is it trending down? And trade in line with it. We don't have the big banks trading against us. There's no voodoo. No one's messing with us. All right, we will see a trend, piggyback on the trend, and the trend is usually then invested in by big money. So basically, if we trade with the trend, we're actually trading in line with the whales. That's a big, very important thing to get across. So we separate technical analysis. Technical analysis tells us stay away from this chart or trade this chart. Trading is then identifying an actual entry into a trend and how we manage those trades. So this is one skill and this is another skill. This eventually, by the way, is not that complex. It's qualifying the setup and then placing our orders, managing our orders. So that becomes almost in a way a finite kind of activity. And this is a skill that we could continue to develop over time. We do our best technical analysis as beginner traders on the weekend. When the markets are closed, we are the most objective and least emotional that we will be. And then over time, we can get better at that. Let me have a look at your comments and then let's work our way through this. Yes, lost traders. What is the best time to trade? Is it at the start of the day or is it okay to do somewhere about mid or at the end of the day? Now, to be fair, I am based in the UK and before this I was in South Africa. So most of the agreed kind of daily candles will be based roughly in this time zone that we're dealing with now, which means the end of day is 10 o'clock. So approximately. Of course, if we're looking at indices, they might have, or futures, they might have different times. So the next, and I'll kind of cover that. I'm going to make sure that by the end of the 60 minutes, I've kind of answered all your questions. So let's go back to the slide underneath. So the benefits are basically that we trade, we have, it's less effort. I don't have to look, get this, ladies and gentlemen, I don't have to really look at or make a decision about trading until either, let's call it 10:30 at night, somewhere around that time. I could do some analysis at 9:30 and then just place my orders at 10:30. So why do I do that? Well, because at 10 o'clock, although the currency markets, for example, and by the way, I'm definitely not stating only trade the currency markets. Personally, I'm a big fan of trading indices and commodities and then currency markets in that order. Currency markets are a push-pull because there's always two currencies in place, and therefore ranging is very normal with currencies. Trending is not as common, but it happens, of course. Commodities can trend for very long periods of time. Indices can trend for very long periods of time. So I like those markets. They have subtle differences. They're not completely different, but they have subtle differences in them. So, but the currency markets, although they are open 24 hours, 5 days a week, at 10 o'clock, all the brokerages around the world open and close, they close and reopen all the trades over a few split seconds because they need to capture what was the day's move, so you have a closed daily candle, and during that period, all right, there's no trading allowed, and spreads will widen. This is something out of the control. Okay, spreads will widen. So for example, if the euro spread is 0.7, it could go up to 3 or 4. It could do it during that period of time. And so I have to be aware of that. So usually I don't want to be placing my orders just before the 10 o'clock close because my entry could be 4 or 5 pips away from the current price. And when that open and close happens, the spike could trigger me into the trade, even if price hasn't gone past my entry point. So I basically wait until about 10:15, which means the spreads calm back down again, and then I place my orders. Now that's one way of doing it. The other way to do it is if I'm an early riser, 4 or 5 o'clock in the morning, I could have those charts marked and come back and place my orders. So that's if I'm using the daily chart, ladies and gentlemen. If I'm using the 4-hourly chart, I might want to keep an eye on the 4-hourly candles, which means if I'm awake until 10 p.m. or 10 p.m., I want to keep an eye on 4-hourly charts until that time. Again, when I'm up in the morning, there's got to be a point where I sleep. I'm not looking at the charts. I have to accept it's possible that the entry lower than the daily, the entry could occur while I'm asleep. It could happen. Okay, we've got to be aware of that. So the next thing that happens is that the spread for the daily for trading on the higher time frames is less as a proportion of the trade setup. Because what I mean by that is if my daily candle is 30 pips in terms of size and my spread is 2 pips, the ratio of the 2 pips to 30 pips is very small. So as a percentage of my candle size, and therefore as my cost of trading, it's less. If I'm trading the 5-minute time frame, I could be looking at a 7-pip candle with the 2-pip spread. So suddenly that 2 pips as a ratio of 7 versus the 2 versus 30 means that the spread now is a bigger cost of trading, relatively speaking. So less volatility throughout the day. I don't have to even look. If I'm trading the daily, I only have to check it again at end of night. So if I obsess about it during the day, what could happen is in the morning, the trade could look as though it's going against me. I'm in the trade, it looks as though it's going against me. I panic, I close out. Then the US comes online at 2:30 p.m. Suddenly the market turns around, breathes in, breathes out, goes back in favor. And actually, I would have been in profit if I just left the trade alone. So the best, least stressful way to trade is trading on the end of day, and you don't check it again until 10 o'clock that night or until the next night, until 9 or 9:30 that night you go back. So what's nice about it is you can just completely forget about the charts and not obsess about them until that time. So it's really, really nice to be able to do that. Intraday trading, you cannot afford to be away from the charts during that period, because that's when your setups might occur, or that's when you might have to do your analysis, and you're almost doing your analysis and placing the trade within a very small window of time, and you have to do it then and there, and then you have to almost maybe perhaps monitor the trade. So whereas with swing trading, end of day, check it at the end of the day. If there's a setup, place the order, check it again the next day to see if it triggered or if it's in profit or it got stopped out, and see what other setups are there. So it's kind of, for me, very nice. If I could go back in time, I would say to myself, Adam, for your first 3 to 6 months, while you're still mastering technical analysis and the platform and placing orders and calculating your account risk and position size, just chill, just do the 4-hourly and daily, because the market's not moving as fast and it's easier for you to spend time waiting for the setup to occur and to qualify it. And I would have just stressed so much less, and chances are I would have made more money, or lost less, I guess is the point. The next thing is that we always have to look at the higher time frame. So the higher time frame, we have to get that confirmation from the higher time frame. We also look at the agenda slide, by the way, but we have to look at that higher time frame. We need that confirmation. So if I'm trading, and let's go and look at a chart. So let's jump across. I'll look at your comments quickly, and then we'll go and have a look at the charts. Okay, good. So there's a question here very quickly, I'm just going to cover this, which says, what can you tell us about stop loss hunting? Although it's possible, although I believe it used to happen, I think for about the last 6-7 years, it's become almost non-existent, principally because that stuff is regulated heavily, and there's so many more retail traders such as ourselves trading now. If a broker was doing that, it gets out a lot faster. So they don't really do it. Brokers do not make as much money today as they used to, because they just can't. They can't really bend those rules as much. But I believe, and it isn't ATFX at all, but there was one that I remember was they definitely without a doubt did it. Absolutely, it was just one and they're not around anymore, so it doesn't really matter. But yeah, so can I demonstrate what I mean by pip? I absolutely can. Let's jump across to the platform, and this is where I have to switch screens, change things quickly, and quickly do that. So just bring up the platform. Okay, cool. So you should now be able to see the charts in front of me. This is the platform MT4, and I've just put a few things on. So a pip is, and actually I can do this also with I want to change to this notepad and just bring it across to you so I can talk about it here for a second. So a pip, for those of you, again, this is all valid stuff. A pip is if I'm looking at the price on a currency, so let's change over to the chart and have a look at something. We've got gold here. I want to do it with the currency. So what I want to do here is let's pick the euro, dollar. You'll see the price here. And we're having a look at price. Let's just move this across. And we're looking here at the price on the right-hand side. So this is relatively new. Back in the day, brokers used to, and I'll just highlight the price there is now, say call it 267342. Call it that. Now, we used to do only 4 decimal places, okay? 4 decimal places with currencies. Now you get 5 decimal places. It's a good thing. It just means we get more accurate entries, we get tighter spreads. It's all a good thing. But a pip is generally, a single pip is a change in unit of the 4th decimal place. So if that goes to 1.2673, that is a change of one pip. Okay, so that's a 1 pip difference. And again, that's 20 pips if we change that. So if that then becomes, let's call it 84, that would be a 10 pip difference. Now, the only exception to this in currencies is anything with a JPY. So anything with a Japanese yen, theirs is a 2 decimal place. Okay, so you will get familiar with this. Please go through Baby Pips's education stuff. It is phenomenal. It's not the formal program that I'm doing, but what it will do is educate you as to all of the information you need to be aware of. Okay, but here, take dollar yen. So dollar yen as a chart here has got 2 decimal places. It's got 3 there because, again, we've got that new extra pip, but dollar yen here is 107.71, let's call it. And if that changes to 72, that would be a pip. Okay, so that's the only difference between those two there. I'm reading another comment here. When Bank of Canada releases interest rates, sometimes during a 1-minute candle, price moves 60 pips, but sometimes the price only moves 40 pips. I need to sort of make sure I understand that correctly, but yeah, definitely during news announcements, ladies and gentlemen, spreads will increase, slippage occurs. I mean, that kind of happens. Professional traders, by the way, do not trade the news. We don't trade the news. First of all, because even if we had a crystal ball that gave us the exact numbers that were going to be released, we cannot predict how the market will react. The market can swish up and down 50 pips either way, kick us in, kick us out, both ways. We don't do it. Okay, that's gambling because there's the probabilities of outcomes not in our favor. When we're looking at, let me explain what professional trading looks like. We go to the chart in the background here, and I show you a chart that I'm looking for. What a professional trader is looking for is a trend that looks almost perfect. Okay, so a trend that we can ride that is safe because it actually has a direction which it's going. A market that's ranging, it has a continuous battle between bulls and bears, and we don't really know. Those are the kind of conditions where probabilities of the market going in our favor is against us. Okay, whereas what we're looking for is something with a very, very clear trend where and the news can interrupt that. So we don't trade the news. In fact, the news could be the thing that breaks the trend. It's going perfectly until the news comes out and it just kills it for us. So what I'm going to do is just throw on a few charts looking for something with a nice trend. Okay, here for example. Okay, so I was talking to you about waves earlier, the ocean, surfing. So we might find that we get small waves, and it's very gentle, but they're small waves. They're big enough for us to surf, but they're very small waves. Okay, but that's fine. If we've got some intermediate skills with surfing, we could decide to surf them or not. Maybe we could get there one day, and the waves are the biggest we've ever surfed. They're quite big. Maybe they're 3 or 4 meters big. We've never surfed them before. We're still beginners. But it's not looking too stormy. It's looking pretty good, but they're just bigger than normal. So that's the point, is sometimes the conditions are a little bit choppier than we're used to, but we've just taken our training wheels off, and so we're not sure if we should do it or not. So that can happen a lot with trends. For example, this chart here is trending. It's trending down, but it's quite choppy in terms of its conditions. Ideally, what I'm really looking for primarily is if I break my choice of charts into priorities, I'm looking for a very smooth trend and then anything that's a variation of that. So what I'm going to try to do is find a smooth trend. Look at this trend. Look at this trend. This is beautiful. Okay, this one, especially this patch here. This is picture perfect money making conditions. Picture perfect. Now, we don't have time for me to go into massive detail about strategy now, but I'm looking, conditions matter. For example, very, very quickly, I've got a 50, 20, and 10 simple moving average. It doesn't matter whether they're exponential simple moving averages on the chart, 50, 20, and 10. But when it's trending beautifully, price goes away from the moving averages, comes back, goes away, comes back, goes away, comes back. I'm going to be looking for entries, okay, from the moving averages, the 10 and 20 here. That's like an area where I'm looking for price to come back to. Okay, it's an area where I'm looking to get into a trend. So basically, I'm looking for a chart that is currently trending like that, and I'm looking for price to pull back into the moving averages. This gives me a general location where I'm looking to join a trend and go with it. Okay, and so basically at the end of the day, so if imagine this was a daily chart. If I looked at this chart now, there's no entry set up for me. Why? Because price is not near the moving averages. I needed to retrace back into the moving averages. And then generally in a downtrend, I'm looking for a small bearish candle. So let's go and have a look at some of these charts. Let's just pick that up, stop this for a bit. I'm looking, generally speaking, for a small, and I'm going to just get rid of this box quickly. I'm looking for a small, ideally a small bearish candle if I can find one. Just find an arrow down is what I meant to say, arrow down. Maybe something like these are small bearish candles over there, something like that near the moving averages as an entry opportunity. And this is too big a candle because I've got to go, remember that my entry might be, for example, below the low of the candle and my stop loss above the high of it. So that means that if I get triggered in, if the trend decides to continue, but once I've gone 100% of that distance, so my entry and my stop loss, okay, so basically let me draw it in. So if that hypothetically was my entry is the low and my stop loss is above the high because I'm looking for that turning point. I need to go twice that distance to get my first target. If I'm risking 1%, this is my 1% profit. So the bigger that candle, the further I have to go to get just to break even. So I don't want big candles. I want smaller candles, ideally this kind of size. Not the smallest, most ridiculously small candles, but small-ish candles. Okay, smallish candles, just not big ones. That's very important. Okay, and I'm looking for those types of things. Like even if I'd potentially taken this one as a small bearish candle near the moving averages, I would have made. I'm looking for 2-to-1s and 3-to-1s, ladies and gentlemen. It's not madness. I want on average to get about 2-to-1 or 3-to-1 on average about every trade. If I just do this day in, day out in strong, healthy trends, my account's going to build up over time, and I don't risk more than a certain amount. So let's just say I don't risk more than 1% per trade. Fine. I can risk less if I am not confident about the trade setup. I can risk less. Now, tonight isn't per se about strategy, other than the fact that we're talking about, I want to introduce to you the idea of trading strong, healthy trends and swing trading. If the setup is there, if it's not there, I just move on. So what does that mean? If I look at where price is currently, I like this trend. I do. I'm just going to fix it there. I like it, but price is not in the moving averages. So this chart can sit on my watch list. I can just check it every day, but I need price to come back into the moving averages before I take that trade. Okay, so what I mean by swing trading being cool is the chart is either trending or not trending. This chart is trending, and there's either a setup or there isn't, and there isn't because it isn't in the moving averages. So that's a very conceptually simple idea. There's either a setup or there isn't, but it doesn't mean that. Now what it does mean is that if I was a day trader, I might go and look at the 4-hour time frame or the lower time frames. So that means that over here I might potentially, let me just reorder this, go and have a look at the 1 hour, and you can see this. So the best trends will have traders trading the lower time frames and the higher time frames. So it means I always think of it as like a kill in the bush in Africa. So you've got the lions, then you might have the jackals and the vultures, and then the beetles. Everybody's kind of picking at that on different time frames. Oh, sorry. For everybody, the website is Baby Pips. I'm sorry, babypips.com. It's got some good stuff. Let me bring it up for you. Okay, just as an additional thing, because there's a lot of junk out there. My advice would be to stay away from the forums. The forums are not always, that's where people rant and stuff, and you don't find professionals really in the forums. Like me, although I'd love to do it, I don't have time. I've got other stuff to do around the house during the day. I'm not really on the forums. I prefer this. This is where I want to interact with people. So let's just see Baby Pips. There we go. And then they'll have stuff like this. It's got a nice, credible reputation. Baby Pips, let's just see it load up. And they've got a program you can work your way through. The point of this is just to tell you that you can learn the definitions of words. You can find out a little bit about, it should be free. I believe it's completely free. And it'll take you through it, and it's really cool. So it should be a free program. You just go through it, okay? And it covers everything. Okay, it covers everything. It doesn't mean that you're going to use everything you read in it, but it means that at least you have a place where you can go where the quality of the content is truthful. Okay, this is, I don't benefit from this, but that's where I would if I was going to go do it. And they will give you the education around those things that you need. Okay, so let's go back to the platform and go back to your comments because we've got 9 minutes and I want to make sure I cover everything. So what we're not, there's a question about scalping. Now, what we're not doing, scalping as a rule is when we look at the much lower time frames, like 5 minutes or 15 minutes, like in and out. But scalping here is the same idea. It's just getting in and then taking profit as you go. Scalping is not the way for traders to make money. I'm just going to say it. Scalping is what every beginner trader gets caught, the trap they get caught in, and they lose all their money doing it. But however, let me rephrase this. Trading the same trend on a lower time frame with the same kind of setups, bearish candle, taking profit as you go 1 to 1 or 2 to 1 or 3 to 1, that's fine. And you could argue that that is scalping. But scalping is a quick in and out thing. It doesn't really work. It's not successful. But if we refer to scalping as trading 1 minute or 5 minute time frames using the strategy of trend-based strategy, then I would consider that acceptable. But for beginner traders, I would still say forget about the lower time frames, because you will get screwed on news announcements, too much volatility. Forget about the market's being manipulated. Forget about that. It's just about the conditions. It's like trying to ride a bicycle on the highway. It's just too choppy. I would maybe look at 1 hour or 30 minutes or 4 hours first, and then build up the ability to process a fast moving market. And by that time, you've got the platform under control. You can place your orders, you've got all that stuff and you can do it. And in terms of profitability, you can make as much money, probably with less stress, excuse me, on the higher time frames. So give me a second here to go through all the questions and to make sure I've covered everything. Okay, I understand you have to leave early, so that's cool. Don't worry about it. A year into training. Okay, so when do you see when the trend reverse is in swing? We'll talk about that for a second quickly. And do you know that you can turn the Fib Retracement Tool into a risk to reward tool? I saw that, by the way. So I saw that, I've seen that, I've done it in the past. So basically what this means is, very, very quickly, the Fibonacci retracement tool, for those of you who are very, very early beginners, again, don't worry about voodoo. With what I mean by that is, this is a measurement tool. The market tends to have these proportionate moves. Okay, it's very normal. It's in nature. There's just things that we do as humans, that like a flock of birds and stuff, we do this, and these moves tend to respond, okay, to certain types of healthy retracements. This is a measurement tool called Fibonacci, which helps highlight areas where we might be able to join a trend. And you can fiddle with the numbers on it and change it into a reward to risk calculation tool, and you just have to Google it, and then all it is you change the numbers, and then when you measure it out, it uses an extension, and it basically projects. There's a way to do it. Okay, I don't have time to demonstrate it, but it's kind of cool. The problem is that when you also want to use a Fibonacci tool at the same time, you can't. It's either got to be but it's a cool idea. Thank you for mentioning that. Cool, and I'm glad you can do that. The beauty of the MetaTrader 4 platform is you might find some free tools that you can use to do the same thing as well. So let me go through the questions again and the entry slide. This is very important. I've got to go back to that original. I'm going to bring it across here. So I'm just going to go to the slideshow and swing it over. Give me a second. I'm going to duplicate it so it's here. There we go. And then I'm just going to minimize this and go through these. Go through these things. So just go back to the agenda. So those are kind of cool benefits, the type of trader that swing trading is most suitable for. So first of all, in terms of lifestyle, if we work quite long hours, it's okay. You have to carve out time to trade. You have to. If you want to go to the gym or you want to get in shape, you have to carve out half an hour or an hour a day and get to the gym. You've got to do that. It's the same with trading. I really recommend, for myself certainly, doing my analysis on the weekend is fun, because I'm not stressing about missing out on a trade that's happening somewhere. I do all my market analysis, which means I go through the charts. First of all, I rule out charts that aren't tradable. They're going sideways. I'll show you that in a second. But the point is, I do that. But it also means that I can create a list of charts I want to have a look at on the weekend. And then maybe charts I'll focus on during the week. So swing trading is great for individuals that are either early risers, okay, or night owls, so up from anywhere from 4 a.m. up to 6:30 a.m., who can put half an hour aside to run through the charts, the daily charts, maybe the 4-hourly charts, to have a look at them, or someone who's up anywhere from say 9:30 to 11 p.m. Okay, to do that. And that's really just about scanning the charts and placing the orders. That's not about necessarily doing the analysis. You can just chill and you can create a chart of daily charts that you want to have a look at, and you can just relax, but you don't physically place the orders until first thing in the morning or last thing at night. So that's kind of cool, because you're not worried about missing out on a trade. Okay, if something's trending beautifully, ladies and gentlemen, take note of this thing. If something's trending really well on the daily, it's going to look good on the 4-hourly. So when I talk about getting in on the 4-hourly, it's because it's trending well on the daily. So let's see if I could find something. So this one's trending really well on the daily. It's moving here on the daily there, strong trend, okay? If I go to the 4-hourly, it's also pulling back to these moving averages on the 4-hourly time frame. It's not the best example I can think of, but if you look, for example, if we go back to this point, I'm looking for smooth trade. Like if I trade only charts that look like this when they're currently live, the probabilities of success are very, very high. The next thing that's very important is, ideally, I want the daily and weekly charts going in the same direction, ladies and gentlemen. Let me repeat that. I want the daily and weekly charts both trending up or both trending down. Statistically, trades that I take where the higher time frame is going in the same direction have more winners or fewer losers. If I trade against the daily, if the daily is going up and I'm trading the 30 minutes or 1 hour time frame and I'm going down, statistically, you have more losers. Doesn't mean you won't have some winners, but as a general rule, you'll lose more money. So you trade in line with the daily and the weekly. Okay, very important. So let's go back to the slides. So swing trading is very suitable for that, and you don't have to do it forever. You can switch from swing trading to day trading, but it's great for individuals. It's actually great for most people. When I go on holiday, I'm always swing trading, which means all I do, take the time out, 10 o'clock, go to my hotel room or whatever, place my orders for 20 minutes, and then go back down to whatever else I'm doing, which is, usually if it's with my family, it's usually drinking too much and talking too much. But I can do that. And that's really it. And it's not stressful. It means I don't have to check my phone or anything at all during the day. I can go back at night and I'll get the same results. And also I don't miss out on a trade. A single thing can't happen if I don't unless I check my chart every night. And it's Monday through till Thursday, because I'm not going to place trades on a Friday. I might look at the market, but I'm not. So it's Monday night, maybe Sunday night. If I didn't look at the charts on Friday, I'll look at it on a Sunday night. And that's it. Go through and do that. So, and it's basically, how long does it take to brush our teeth at night? Like 5 minutes, call it that. But it's kind of putting that sign. The fastest I ever do is like 5-10 minutes. I go through it. Do I need to update anything? Is there any other setups? No. And I'm quick when I go through that. Maybe the longest is 30 minutes, but it's quick in that respect. It also helps. There might be noise and news that I don't have to obsess about. Most of the time, the news will not impact my trades, but sometimes it will. But most of the time, I won't. And sometimes with small accounts, someone comes to me and says, I've only got a $2,000 account, or maybe a £5,000 account. Then it comes down to the candle size, ladies and gentlemen. A 25 pip candle is probably accessible on a $2,000 or $5,000 account. So then it's the candle size. That's it. Okay, so candle size, 25 pips, 35 pips. Basically, work out if the smallest volume you can do, let's have a look at this. If the smallest volume I can do on an account is 0.01, okay, then I can work backwards. If I've got £1,000, which is not ideal, I want more than that. That means my 1% risk is, call it, okay, £10. That means, all right, if this is on average, please bear with me, 10 cents a pip. Okay, that means I can do almost 100 pips, give or take, on that trade, give or take. Is that right? 10 cents a pip, £1, yes, give or take. So in theory, it should be possible to trade end of day even on a relatively small account, but the candle size is important. It'll have to be, you can work backwards and you'll just know, okay, basically for my account, I cannot trade a candle that is bigger than whatever that might be, 70 pips, and just go, that's it. So if it's bigger than 70 pips, I can't take the trade on my account size. I've got to look at your comments, ladies and gentlemen, because we've now reached the top of the hour. Oh, okay, sorry. Why are you seeing the Excel thing again? Sorry, ladies and gents, give me 1 minute. Let's just go back to this. Why are we seeing this again? This is where we are, sorry. So I'm just looking at your comments. I was talking about these things and I had the checklist up. There we go. Sorry, you can grab that. Sorry, I didn't think I'd gone back to that spreadsheet. So I'm just looking at your comments so I can wrap up on these ones. Sometimes there's a conflict between the daily and the 4-hourly time frame. On a daily time frame, excuse me, price will be trending down, whilst the 4-hourly time frame will be trending up. What is your advice on this? Again, if I get my daily set up on the charts, what could be happening is the 4-hourly could just be starting to turn. If the daily meets my criteria and I get a nice bearish candle, I'll take that trade. It's fine, because what that normally means is the 4-hourly in the next 12 to 24 hours will turn around. Yes, I'm more concerned if there's a conflict between the higher time frame and the current time frame. So which moving averages would you suggest as a best indicator? I like the 50, 20, and 10. I can also throw in the 200. So basically, I can throw in the 250, 20, and 10. And all it really does is it tells me the trend is established, and the 10 and 20 together give me an area where I can look for entries into a trend. The 50 just gives me that extra confirmation that the trend is going in the same direction. Cool. So yes, and also, so there's a comment here about trading full time. The question that everybody here needs to ask themselves is, if I only had to work half an hour a day, or an hour a day, doesn't matter whether it's 2 hours a day. The point is, if I only had to work for a very small part of my day, what else do I do with my life? Because that's the problem. If you don't have anything else to keep you busy, you sit in front of the charts, then you see things, and then you see trades, and then you place a trade. That's like it's susceptible. It's like, I guess it's just sitting in front of food, and eventually you're just going to eat something. So first of all, make a decision and go, what else do I do if I'm not, or what do I do when I'm not trading? And that's really important. I go to the gym, but you got to have plans, because if you don't plan, you'll sit in front of the charts, then you'll place a trade that you wouldn't have done if you wouldn't have done otherwise. Okay. Spreadsheet, still Excel, cool. Okay, I think I've changed everything there. Okay, so ladies and gentlemen, I'm just wrapping up here. So it was really just to explain kind of, pros of that. Very hard to miss a setup. I can't miss one. It means that's the beauty. It's basically end of day, I see it there. If the candle's the right size, I can do it on a relatively small account. I'm always taking profit at 1-to-1, 2-to-1. Now tonight we didn't cover strategy. Now I know ATFX does include actual strategies they cover, and I am trying to get them to allow me to present our strategies, but they already have stuff they're offering for you. So my recommendation is you investigate that. If you have any questions, you can either email them directly to get that and let them know that. Basically, the contact details towards the end. So the ATFX obviously are regulated by the FCA. Obviously the platform you've seen, so this is using MT4, which has additional tools. But if you have any questions as well, you can email them. And also, if you want me to get them to get in touch with you to answer a question, just let me know that and I'll do that. But essentially, they do offer these. I believe they do help provide some good education around. So swing trading works very well with trend trading. Really, that's where it goes really well. In my experience, for me, counter trend trading is not a great idea. It never has been. My trading has really calmed down since I have switched to just trend trading and swing trading effectively. And so that's really my goal here, was to kind of convey that, is to help beginner traders get to a point of less stress, slightly more profit, more time to analyze the charts, to build up their technical analytical skills and their confidence. And sure, there's confidence involved, but confidence stems from when we feel like we're in a bit more control, and we get a bit more control when the markets are moving all over the place at a crazy pace. So that's definitely something. So yes, I understand that I alluded to kind of a strategy. It's not a secret, it's just limited time. So if you want, you can obviously request that, we do that. And so I was introducing the way that I approach, which is looking for small candles from the moving averages and then checking against the higher time frames. So the daily going down as well as the weekly going down. And really, strategy unfortunately wasn't part of the limited time we had this evening. So, but what I did want to do as well is tell you kind of staying away from certain things as well, to get traders to avoid the mistakes they can often get trapped in. And trading is really about trusting in a way what's going on in the chart. If charts are trending very, very well, those conditions are going to look great. Some charts don't trend very well. So if I look at EuroCAD here, for example, okay, so EuroCAD, if we go to where it is currently, and I look at it on, say, a higher time frame, these are not the kind of conditions I'm looking for. So I would stay away from any chart that currently is looking like it's going sideways. It's just, there's no money to be made on any time frame on that chart. I do want to be focused on charts that have a relatively clear trend to them, where there's a nice trend in place. So just by looking at the charts, I can see in the moving averages heading out as well, I can see that they're going relatively well. Now, Yeah, and then ultimately keeping an eye on key levels. Key horizontal monthly, weekly, and daily levels are where prices changed direction in the past. So there was a question about, kind of when are we aware that a trend could change direction? If we identify these key levels and we can identify them ahead of time, especially on currencies, those are the locations where price could potentially change direction. And so I would not look to get in. For example, if this was a hypothetical, I would be very cautious about getting into it. If I'm getting into a trade here, I am close to a point where price could change direction. I'm looking to take my profit ahead of that level. And that's usually what we would do. And price generally goes from one level to another, which means that if price hasn't reached the next big monthly, weekly, or daily level, the probabilities are if it's trending well, it's going to keep going down to that level. So that tells me how much potential profit there is on that trade as well. Cool. Okay. So, okay, so this keeps changing screen. I'm sorry, I don't know why it keeps doing that. This is on me. Apologies. It should not be doing that. It just keeps doing it on its own. It's not me. I'm so sorry about that, ladies and gents. That was not meant to be the case. And here we are, we're 7 minutes over. So I'm going to wrap up here. I really just wanted to convey as much information as I could. And I apologize about the screen changing thing. That I've not had that happen before. But I do hope that you found this instructive and useful. And if you, yeah, absolutely. If you have any questions, let's, okay. Yeah, these ones, I've gone and I access these through the symbols, and then I can go through and add items as they occur. Okay, I can keep an eye on those. So possibly you might be able to add those or not, but they should give you those choices, I think. And so, ladies and gents, I'm going to have to end the webinar, I'm afraid. It is recorded, and hopefully this gives you some opportunity to revisit some of those items. And ATFX are very good with paying attention to their customers. So if there's stuff you need, they will definitely do that. I very much like the folks there. Great. And I want to say thank you very much. It was an absolute pleasure. So I'm going to end the webinar now. It's going to hoof us all out. So thank you very much. And I look forward to seeing you in future webinars. So thank you very much for your patience. Have a good evening.